What's up traders, welcome to Failure to Displace, and in this video we are going to take a look at the New York AM session, specifically looking at S&P 500. We will start the analysis just before the 9:30 New York Stock Exchange open. So we're on the 15-minute chart at the minute, and we can see the price has just swept London high, but also previous day's high here. So we can keep our eye out for any potential reversal here. We've left this 15-minute fair value gap, which we need to mark out on our charts for future reference if we start dropping down the time frames. We can see London and Asia have got some stacked liquidity below us, so relative equal lows here. So there is a lot of liquidity down here, so potential draw lower. And again, we've got the New York PM session here, and then after a very large rise yesterday, the previous day's low right down here. So given the fact that we have some stacked liquidity here and we've just swept previous day's high, and this high is the closest high for a long time back. I mean, we are talking weeks and weeks and weeks away since we were up here, and in fact I think we might be at the yearly high. I'm going to be looking for potential short setups. So let's jump into the 9:30 open now on the 1 minute time frame and start seeing what we get offered. So today we've got some volume in the market, which is why I'm looking at the S&P 500. Recently there's been no volume in the market and it hasn't even been worth considering. So 9:30 is opened and we are just rocketing away. So very, very bullish at the moment. Our break of structure for the reversal trade, which is what I'm looking for, is currently all the way down here. So this is our swing low that generated the high, so that would be our break of structure. So we would want to see displacement below this for any kind of short position. I'm not going to be looking at taking any longs here. We are too far gone, too overextended. I've not got any high-end time frame analysis to tell me that I should be taking any longs. I've got no liquidity to target here, so my plan is to basically, because we've swept the London high, look for a 2022 mentorship model reversal trade. So we've created a new high now, which is going to give us a new swing low just down here. So our swing low is identified by a candle higher to the left and higher to the right of it. And this is our swing low that has generated this high. Into the silver bullet hour now. So we've got a break of structure, no body close here. Body close, no body close, so it's rejecting. So when I'm looking at break of structures, my new theory that I'm just implementing, so I'm not getting caught into these kind of moves, is I want body closes over the break of structure. So I've mentioned in previous videos we want to see large displacement candles, so candles that are much larger than those around them, which these aren't, and also a body close over the break of structure. We do have, actually, this would be a break of structure here. So that has broken structure there, and it is a body close over. I wouldn't class this as a displacement candle though, so I wouldn't be looking to take a short at this point. And that would have been a good decision because it's just traded straight through it. Putting relative equal highs here now. So our new break of structure is here. Again, we've got to keep our eyes open for some displacement candles. So this looks better, slightly larger candles than before. We've had one large bearish engulfing candle and another large candle. Not closed over that low though. Pull back into the range, there's no short for me there. So we've got body closes over here now. So I will highlight here now because we have got body closes and we've got two large candles. So I'm going to take note of this fair value gap. I'm going to take note of the lower fair value gap as well. This is a balanced price range here actually, which is quite a nice thing to see. Let's just mark this up. So we have this bullish displacement candle, so this bullish fair value gap here, followed by a bearish fair value gap coming down. So where the two overlap here is a breaker, which is exactly on 50% of the actual fair value gap. I'm just going to change the color of this so we can see it. Let's make it yellow. So that's nice where those overlap 50%. So let's just see how price reacts at that fair value gap. Closed through it. Not a good sign. Respecting the top of it, so this could be an inversion fair value gap. We have got the smaller fair value gap here. So let's just look and see if this gets respected. Just tap the bottom of it, pulling back. Closed back through the fair value gap, 50% there. See if it keeps respecting this. So we've got a swing low here now. And it's respecting that fair value gap. Let's have a look what this is. Respected that fair value gap again. This is a slightly different entry, but what I am tempted to do here is look for an entry at the break of this low. So we've come up, we've tapped the upper fair value gap, so we'd closed through this balanced price range and fair value gap. We've now come back through it and we appear to be respecting it. Don't feel confident enough to enter in the fair value gap, but if price was to continue down, so this is similar to what Stacey Burke has, he has M's and W patterns, and this is the beginning of an M pattern. So we have the right shoulder of the M, potentially the left shoulder of the M, potentially the right shoulder to build, and when the right shoulder builds we could drive through this. So this could be a potential short trade if that breaks with a stop loss above this high. I'm going based on the fact that these fair value gaps seem to be holding. We have closed below the break of structure. The bearish candles are a little bit larger than the bullish candles. Again, respecting the 50% of that fair value gap. It's closing through it. Yeah. So this is the right shoulder. Closing through. Oh, and there we go. Not sure what happened there, if we had news or anything. Crude oil, US housing, what time did that hit? That hit at 10:54. There's nothing at 54, so there's no news on. So that is essentially the Stacey Burke entry then. We've come up broken structure, we've retested the high, we've created an M formation, and we have just completely engulfed it. Break of the low. We've hit 1-to-1 already, so I would be risk-free at this point. So 50% off at 1-to-1 leaves 50% of the trade remaining. So if price reverses here, then the 50% take profit that I've just taken would act, or would cancel out the 50% loss that I would take should the stop loss get hit. We have marked out these 15-minute fair value gaps, so that would be a potential take profit, giving us a 2.7R. See what happens. Smashes straight through it. This is almost like it's a news driver for some reason. So yeah, they're out for the trade at 2.7. You could take partials off there and be potentially running this to take out the daily low. Pull back, respecting the fair value gap. And we're just about to come up to current time. So we're back into the entry now. We are outside the session window, so there's no entries here, so this is just a case of hanging on with whatever you've got. And that's live time. So with that big displacement, there's potential here that we could take a run at the daily low here. Very explosive price action based on an M formation at the top. So we had the M at the top here, and then micro M in here. As soon as we break the center of the M, price has just accelerated down. Just having a look on the 5-minute just to see what we've got offered on the 5. It's actually cleaner on the 5. let's get rid of this. 50% of the 5-minute fair value gap was respected perfectly. So we come down with broken structure with a body close, come back, tapped the 50% of the fair value gap, and then rocketed away. So the 5-minute was probably a better entry, actually, just off the fair value gap. If you were to take, not a long position there, if you were to take a short position off the bottom of that fair value gap, stop loss above the high, and again targeting that 15-minute fair value gap, specifically the 50%, which you can see, look at that wick is just down to the 50% of that. You've got a nice 3R trade. So the 5-minute was actually a cleaner setup than this 1-minute tweaking strategies to try and find yourself a trade. And now we're pulling back aggressively into the fair value gap again. So there you go, that was the New York session. 2022 mentorship entry, looking for the short trade to eventually, hopefully, come and take out these daily lows. Hope you guys found that useful. If you did, please leave a like on the video. If you got any questions or comments, please leave them in the comment section down below. And if you're enjoying seeing this kind of content, then please consider subscribing. I'm dropping these kind of videos every single day. Thanks very much, and I'll see you again in the next video.